afternoon, everyone, and welcome to this session where we look at the World to Africa research results. I'm Tanya from Lill, I'm the CEO of SAVCA, and it's exciting for me to be here with you this afternoon because I've walked this journey when Standard Bank commissioned this research from the ValueExchange and was involved in this research from the onset. So this afternoon, what we will do is we will invite Barnaby Nelson from the ValueExchange to briefly go through the survey results and show what were some of the significant findings from the actual research. And then we've invited Hari from Standard Bank and Lydia from ENSafrica to join us for the panel discussion, and we'll introduce them at that point. Just to unpack a little bit the story behind the numbers. So why are the sentiments the way that they are? What are the triggers? What would ensure more capital to flow to Africa? Also, if you want to ask your questions, please feel free to use the QA and the QA box to ask your questions. Also, we will give you an opportunity to ask your question in person when we reach the QA section. So feel free to use the raise hand function to do so. So welcome this afternoon. For those of you who've just joined us, I'm going to hand over now to Barnaby Nelson from the ValueExchange, who was the key driver behind this research. And Barnaby is going to take us through some of the findings, which when I saw it for the first time was very interesting. A lot of it we knew, but there were some nuances that I think that we weren't aware of. And I'm excited to share it with you this afternoon. Barnaby, welcome so much. And I'm going to hand over to you.
Great, thank you very much, Tanya, and it's a real pleasure and a privilege to be here, particularly coming off the back of your comment really around the fact that this has been a big project so far, and one that's absolutely would not have been possible without the support of SAVCA and the members who are dialed in. So, you know, one of the core things about this research project, like many others that we run, is it depends entirely on feedback from the market. So everything we're going to run through, as you said, much of the challenge with surveys is that it tells you what kind of the majority already think, and we kind of know that. But ultimately, you know, this is the aim of this session, is to be able to unpack, as you said, and to dig into probably some of the more surprising bits and pieces that are in here. So just to recap on, hopefully everyone can see that, let's work smoothly. So just to recap on what we are talking about here, the World to Africa campaign is one that's been led by Standard Bank, and we have Hari on the line to be able to talk through that when we get to the panel piece. But ultimately, the whole intent of this was exactly as Tanya, as you say, to be able to look at really the current views on Africa in terms of who's investing into Africa, where people are investing, particularly from overseas, in terms of what the investment destinations are, so markets, asset classes, and sectors. And then ultimately, really, what happens tomorrow? So what are the near-term plans that global investors have, and what are the kind of key triggers for increased flows? So the whole thing is designed to be very kind of practically oriented. I think as we said on the chat, what's fantastic about this is that we've got about responses here representing about 225 firms around the world. So as you can see here, we've got a really fantastic mix, thanks again to SAVCA and to your members, across North America, Europe, African investors, and even Asia Pacific investors, and all different types of investor as well. So as we go through this, one of the things I would say is that working with everyone, we've pulled this together into a kind of top findings, but ultimately anyone who wants to dig into this information in any way, please do reach out through anyone at SAVCA or to us, and we'd be happy to walk you through the kind of the breakdowns of any of the information that you see here. So what is the story? I think, you know, starting off, you know, basically, you know, as I said, is what's the current landscape? You know, I think not surprisingly, you know, there's the major corridors of investment into Africa predominantly are Africa and Europe, slightly ahead of North America, as you can see here. And that's no great surprise, but I think what for me is really striking is if you look at this as a global body of respondents, the fact that 44% of respondents are actually investing into Africa today, allowing even for a little bit of Africa bias in the people that we reached out to. So it's a much higher number than certainly that I was expecting. And I think particularly, I think if you look at the breakdown between portfolio investors, so basically moving into the broadly speaking, the secondary markets, and strategic investors, so private equity, direct investors, you can see that ultimately the numbers are roughly commensurate with each other across the three regions. Ultimately, one of the big questions is why investing into Africa, and this kind of breaks down into many parts. But I think for me, it's an important starting point to realise that ultimately, one of the things that from an outside-in perspective that drives Africa investments is always going to be investment returns and the valuations that you can get from an Africa perspective. It's obviously high growth, high returns market. But I think what's really fascinating is that depending on who you're speaking to around the world, the ancillary drivers do vary a great deal. And I think for me, standing out in that list is that, from a Europe to Africa corridor perspective, one of the things that was a big surprise in this research was how strongly the ESG angle comes out. So ultimately, from a European perspective, which is kind of ESG land in the world at the moment, I'd argue ahead of North America, mainstream North American investors and APAC. The driver of ESGs and impact investing, obviously on the more direct side, is a key one. Whereas in North America, as you can see here, it's more about portfolio diversification and basically spreading your global and your risk in various definitions. And for me, this is a consistent theme that comes up, that depending on who you're speaking to, whether it be North Americans or Europeans, excuse me, the narrative is subtly different. And therefore, as we go through this, the challenges that people face and obviously the expectations that they have do vary slightly as we go through. But in terms of who we are speaking about and speaking to, I think one of the most encouraging things about basically the flows into Africa today is the stability of them. As you can see, ultimately here, both of these charts really just highlight the fact that major institutional investors make up the mainstream of Africa flows today, both on the direct side and on the portfolio side. And that really does, if you think of the investment behaviors, it means that there's relatively or proportionally less kind of hot money flows, less tactical money coming in and out, basically aiming to hit up specific opportunities. And it's, there is a foundation layer, a very strong foundation layer of investments into Africa that are led by stable long-term investors. And obviously from an investment perspective, that has, great implications in terms of market stability and broadly speaking, currency, cross-currency stability as well. Now, in terms of where everyone is in the Africa journey, one of the things that we really wanted to dig into, and we've looked at this from many angles, is everyone is obviously at a different stage of the life cycle of investing into Africa. You have, as you can see here, you have 44% of the respondents overseas. So this is people in North America and Europe predominantly. 44% of them are in the process of learning up at the moment in terms of getting familiar with the African markets, understanding, looking at structures, looking at potential investments, but ultimately writing the business case for that first trade in Africa, if you like. You have about 8% who are getting ready in different stages of readiness to begin trading. They've got their approvals, they've got the business plan written. They're just waiting to get into the market. And then you have a quarter of the respondents who are into the market, but who have spare investment capacity. Now that one I want to come back to later on in terms of what people are doing with that capacity in 2022 and beyond. But ultimately, really, there's a couple of key things here that are worth drawing out. One is that, as you can see, 3/4 of the people that we spoke to have a plan to increase their Africa investments at some point. And second of all, is that ultimately the biggest win that we can have is through the investor education element and helping people in that learning up stage to make that first piece of investment which comes straight back to why we're having a conversation today and why SAVCA is such a critical kind of part of the overall investment mix into Africa. Now, in terms of where people are investing into, so you've got that spectrum, but ultimately, where are those the 26% plus investing into Africa? Not surprisingly, this is in terms of number of organizations, not AUM, but not surprisingly, on the portfolio investors side, you have very high amounts of, basically splits, half-half split between equities, fixed income. I think the bigger the organization, the more people look towards offshore products like Eurobonds, GDRs, that kind of thing, particularly on the portfolio investors side. But I think on the direct investors side, one of the things that really stands out is this kind of balance between listed securities and basically private equity. I think debriefing, walking through this with Tanya, I think one of the things that for me that stood out is that at the end of the day, equity is still equity, whether it's listed or it's private. Ultimately, it's an exposure to companies, and there are many reasons why organizations may prefer to be taking direct investments in listed securities from a valuations perspective, liquidity perspective, and everything. So even from a kind of strategic investor's perspective, it's not just a PE story. 11% of the portfolio is made up of basically of listed securities as well, which I think is a bit of a standout for me. Now, in terms of where those investments are around the region, and I would underline that there is a Southern Africa bias in this data. So we didn't cover the North African economies as part of this survey. So, if people wonder why Morocco, Tunisia, Egypt, and the other big markets are not in here, it's because they were outside the scope. So not to do them down, but ultimately, if you look towards the Southern African kind of markets broadly, you can see that basically the big three stand out. South Africa, Nigeria, Kenya, very, very significant markets. But equally, I think one of the things that's come out as we've debriefed with market participants is the fact that actually the investments and the growth is not just coming from those major markets, it's coming from a more diverse range of markets, including markets like Botswana, Mauritius, and others, Zambia. So ultimately, the story is moving away from a highly concentrated investment portfolio, say 10, 15 years ago, which was really South Africa, then the rest, towards a much more balanced perspective, as you can see, stretching across many markets around the region, and particularly moving away from essentially resource economies to non-resource economies, as you can see. Now, the resource point is an interesting one because ultimately, one of the things that really stands out for me is the fact that from a sector perspective, when people are investing into Africa, the standout really is that Africa is broadly speaking a technology and fintech destination. And so if you come at this from a kind of old world perspective, natural resources, finance, infrastructure would have been the historical destinations of investments. But for me, the enormous growth of the digital economy, if you broadly call it that includes digital infrastructure as well as pure technology firms. That's very clearly the central destination of investments into Africa at the moment from overseas. Over and above, as I said, probably the more bricks and mortar old world sectors that we would have seen in the past. Now, I was saying about the 25-24% who have growth expected or spare capacity in their investment portfolios. One of the things that's really interesting in the survey is how that growth is expected to materialize. And ultimately, it's happening very much in 2022. So what this slide basically breaks down is essentially people's views of existing allocations and what they plan to do with their spare capacity, whether they plan to deploy that investment capacity this year or basically just some point in the future. But as you can see here from a strategic investor's perspective, 23% of investors see basically growth in their Africa portfolios in 2022 in a broad sweep of markets, as you can see on the dark blue of the left-hand column. So you can really see that ultimately, first of all, there's serious growth expected kind of right here, right now. There's extra capacity left in terms of the additional 19 prospective strategic investors. But you can also see that, you know, it's not just South Africa, Nigeria, and Kenya that are going to be the recipients of that investment. You've got a whole swathe of economies that are actually going to be picking up some serious growth from foreign investors this year. When Tanya and I were debriefing on this, she came up with the most brilliant expression about which markets are needy versus sexy. And I have to quote that because I've used it so many times, but ultimately, you know, I think the key for me in terms of deciding the investment destinations is ultimately the ones that there are certain economies in here that have the right sector appeal. Again, as I said, moving away from the resource economies, so markets like Botswana, Zambia, as I mentioned, but also ones that actually where there is a strong degree of government and market focus on driving GDP growth through foreign investment flows. Those are the ones who are basically seeing the capital kind of come in at the moment. So essentially, each market needs to find themselves in one of those two buckets if they are going to thrive in 2022 and beyond. So just very briefly, the last couple of points I want to make is ultimately, you know, drilling down onto the where does the expected growth come from? When we break down that first stat about where is everyone in their Africa journey, there's a couple of key things here. One is that the majority of new entrants are really going to be coming in from North America predominantly, as you can see here. 49% of North American respondents are looking at Africa, with a lower percentage who are already in. And equally, there's a sweet spot from an AUM perspective across all profiles of investor, up to basically in the kind of $1 to $20 billion range. The guys who are above that, there's as you can see, a large incidence of organizations that are kind of maxed out in terms of their Africa portfolios, but there's a significant amount of growth from anything around 500 million or above up to about 20 billion. So the last point really is then just the whole question of basically why not. So we talked about you know, where the investment corridors are. We've talked about basically where those investments are ending up and what the outlook is for them. But obviously, not every story is all you know, all upside and positive news. There are challenges involved in investing into any market. So what are those challenges? I mentioned at the beginning that there is this distinction between North Americans and Europeans and in terms of their view in Africa. And I think one of the things that comes through in the research is that generally speaking, you know, I think the Americans act with their heads and North Americans act with their hearts to a degree. So North Americans, as you can see, are generally looking at understanding the market, understanding the mechanisms of the market, how the market functions and how they manage their risk. So ultimately it's a question of how to, versus the Europeans who are still more at the, okay, I need to understand why I'm going to get into Africa. Basically, how I'm going to generate investor interest, how I'm going to manage the economic kind of country risks and so on and so forth. So there are nuances here, but ultimately neither of them are you know, blocking. But if you zoom in on the core challenge, ultimately, I think depending on any current investor that you speak to is going to come through very strongly and say, look, it's basically around, my biggest concerns around FX and currency, you know, basically liquidity and the whole repatriation process, including the impact of market liquidity on the repatriation. You know, as somebody said a little while ago, if I can't get my money out, then I'm not even going to begin this story. And I think there is a degree of people who are standing on the sidelines of Africa today because of that concern. But ultimately, FX concerns do predominate. The other thing I would mention here is very strongly that the impact of investment education is very clear, that those who are standing on the outside looking in, you know, country risk is the biggest concern that's keeping them out at the moment, that whole kind of the macro perspective. But as you can see on the right, those who have actually who have entered the market, actually country risk is a very small factor for them in terms of actually concerns and blocking issues for them investing. So the last point I really want to make is then basically, so concerns is basically, depending on where you are, it's either the mechanisms of the market or the market itself from a macro perspective. Major challenge, FX liquidity and FX repatriation. And ultimately, what would be the trigger for more flows? Now, it depends largely on who you speak to, but I think interestingly for me, you have local market reforms. So basically African investments being in the hands of African markets kind of is the key narrative here, that stand over and above ratings, over and above ESG as a kind of like as an objective, and also index changes. So obviously it depends on who you speak to. So, you know, fund managers, mutual fund managers are going to be more slanted towards index weightings changes. The big portfolio investors of north of 20 million are more focused on ratings changes, but broadly speaking, local market reforms in the FX space are pretty much the things that are being cited as the major drivers of flow. So that's you know, pretty much what I wanted to go through in terms of materials. As I said, there is a huge amount of background information to this, but hopefully that sets the scene at least for a decent conversation. And Tanya, I'm sure you will let me know if I missed anything that we talked about last time. Then, you know, let's we can jump in on that in the conversation.
Great, thanks Barnaby, and thank you for setting the scene and giving us really the essence of the research. I'm going to invite Hari and Lydia to join us. So Hari Chaitanya is from Standard Bank, and Lydia Shadrach-Razzino is no stranger to the private equity industry from ENSafrica. I've got a few questions that I'd like to share with them, but I'd also like to hear from the audience. I see there's a question that came in, we'll deal with that now. But also if you want to color some light into the numbers in terms of what you've seen, your experiences, your stories, please feel free to share. Barnaby, my first question is just going to be to you. A lot of times we do research and then we want to understand, you know, how valid is the research? So we've got over 220 responses. Statistically speaking, can we trust it? Can we use this data? Is it enough information to be able to tell us what real sentiment is?
Yeah, it's a great point, ultimately. And yeah, I mean, it's very easy, unfortunately, to build a lot of stories off not much data. But I think this is the value of this project, has been that, you know, there's two sides to any of these research campaigns. First of all is the statistical basis, as you mentioned, and second of all is the amount of feedback that we're then able to take in and kind of use to strengthen the perspectives that we share. I think on the first point, the real value of working as a collaborative on this project, so led by Standard Bank, but with BNY Mellon, MEDA, SAVCA, and the global custodian, you know, and ourselves, you know, we've managed to get really great reach. And as I was saying at the beginning, for me, what's fantastic is that we can break out the narrative into still a statistically significant grouping across you know, across institutional investors, fund managers, portfolio investors versus strategic investors. So for me, you know, we always stop the analysis when we go below about 50 respondents in any one group. But so that's our kind of threshold in terms of firms. So everything we've built on so far is basically north of that line and therefore significant. But the other point I would really underline is that we've now had about 15 odd debriefs on this so far. And so, you know, a lot of the conclusions that are coming through are really based not only on the stats, but also on the feedback that we're getting from experts like yourselves. And that will continue through the next month or so.
Thanks, Barnaby. So it's a great base to work from, but the coloring in the stories and sharing the qualitative experiences is also valuable.
Yeah, absolutely.
Thanks, Hari. So Standard Bank commissioned this research. Maybe just tell us why, what were you hoping to achieve, and did this research, you know, add some value to what you wanted it to do?
Well, thanks, Tanya, first of all, for inviting and setting up this webinar, and you know, your partnership right from the beginning of this project. And I think that's been a great journey. So, you know, in our experience in dealing with global investors and within the markets, we felt that, you know, there is a need for more information about Africa to increase the awareness and address the risk perception about African markets among global investors. And at times you would have realized that these perceptions are really overblown. And equally, when we in the region think about the global investor sentiments, there are also assumptions. And hence we thought, a direct feedback from global investors is the right place to really start. And so primary objective, in doing this exercise was to say, can we demystify investing in Africa by using data? So, we're reaching out to the investors, we are directly hearing from them, and that can really help in driving the conversation on two sides, one with the investors globally, and second within the region with regulators and market infrastructure. So that was the sort of objective we start with. And actually, I'm very glad that first of all, we got a great response. And just to add to your previous question to actually Barnaby about validity of the feedback. One data point which we noticed, 50% of the responses have come from CEOs or CIOs or the head of investments. So really senior individuals in these organizations who have responded. So I think that gives a lot of confidence about what investors are telling us. But for me personally, I think the results, one, it validates a lot of known trends, which intuitively we knew, but it sort of validates with the data. And second, equally, it also provides the new insights about the client behavior in terms of which market they are focusing on, which sector, what are the drivers and challenges. And then now, basically, we want to use this to really create the engagement in the wider industry with forum like this. So, where we can discuss the findings, get more qualitative feedback from the actual investors, and then identify the areas where either we can drive the advocacy along with the infrastructure and the regulators in the markets, and equally with the investors globally to really help them understand about the true picture of the region. So they may have some assumptions which are right, some are not right, and then we can give them a really useful picture about the market. So that's the objective, and I would say it's been great so far. But I guess we got the data. Now we really have to engage and and get more feedback from the clients. So I think that's going to be the key going forward.
Thank you, Hari. And also thank you to Standard Bank for commissioning this. I think all of us in the field of trying to get more capital to Africa realize that there's a lot of perception management that we have to do. So we're glad to have Standard Bank on board to help us with that. Lydia, from the industry itself and looking at the data, so a lot of there's a bigger portion of funding emanating from Europe as opposed to America. And we've had conversations about this before, but why do you think this is the case? What are some of the aspects that we need to consider in terms of where the money is coming from?
Thanks, Tanya, and thanks, Barnaby and Hari. That was very, very useful and stats that we'll certainly be looking at and interrogating. So Tanya, my view of why more from Europe versus North America is quite a simple view, right? And that is, we have, as Africans, a much better relationship with Europeans than we do have historically with the North Americans. But let me unpack that a little bit, right? I mean, the Europeans have been, well, colonizing and visiting Africa for many, many years. So they're familiar with the territory. They know us, they understand us a lot better. Also in proximity, we're a lot closer to Europe than we are to North America. It's more easily accessible. And we're, for the most part, in the same or similar time zones, right? So it's not so difficult to execute and implement deals and transactions efficiently across these borders. So that's my personal view of why. And so on the other side of that, there's the North Americans who are quite unfamiliar with us. They see us as more foreign than probably anyone else on the globe. And the old saying that we always laugh about, that Americans think we have lions walking down the street, is not too far off, to be honest. And so we enjoy spending time in game reserves, right? And you meet a lot of American tourists in game reserves. And some of the conversations will actually shock you. And that's because, and that goes to the information and what they understand about Africa, right? And I think that feeds through even up to the sophisticated big corporates and organizations. So that's just my simplistic view of why I think more from Europe. And from a DFI perspective, there's quite a significant DFI investment that's coming in through from Europe. And we've seen that firsthand. For example, in the last 2 years, more than half of the new clients that we have onboarded, particularly in my team as well, have actually been DFIs. And it's been surprising, but not so surprising, and nice to see. And the investments are pretty diverse as well.
That's good to know. Thank you, Lydia. And I share your sentiment with the proximity, the familiarity, knowing that there's Africa is not just one country, etc., and understanding the nuances of the different regions. There's an interesting question that came through, and lucky for us, we've got Dr. Anthony Costa from the presidency as one of the participants. And we're going to give him an option to actually answer this question. So I'm putting him on the spot. So sorry, Anthony, and thank you for your willingness to participate. But the question was, in 2018 into 2019, President Ramaphosa and his team aimed to raise 100 billion funding into South Africa. Is this still on the table and included in the numbers that we've seen? And has COVID changed anything? Anthony, welcome, and thank you for your willingness to participate.
Thank you, Tanya. And yes, you did rather put me on the spot. So it's just as well I wasn't making a cup of coffee and was paying attention. And thank you very much for the question. I think, you know, without certainly wanting to distract from the topic as a whole, just to remark as an aside, I think this is incredibly valuable research, and it's also, you know, incredibly promising and does show the opportunities that we do have. I think it was really interesting to look at the sectors and where people are investing in that whole shift that Barnaby pointed out from traditional investments through to where it's moving to going forward. And that's certainly something we've seen from our engagement with potential investors. In terms of the president's investment drive, absolutely, it was launched by the president in April 2018, shortly after he assumed office. He appointed his investment envoys, and the objective was to raise an additional $100 billion of investment in South Africa. We subsequently have been referring to that by the Rand value, which was at that time 1.2 trillion Rand, partly because we don't want to chase an ever-receding target, but also because it's not just FDI. It's all investment in South Africa. So it's investment by foreign firms into South Africa, as well as investment by South Africa-based firms. Based on the most recent investment conference that we held in late 2020, we had some 770 billion Rand of commitments, and companies regularly report on the disbursement of those commitments. And the next investment conference will be taking place on the 24th of March, and we'll provide an update there as to the status of those commitments. I think safe to say that FDI has certainly been impacted by COVID. So we've seen FDI, we saw a bit of a recovery in 2018 and 2019, but 2020 and 2021 were sharply impacted, and the numbers have gone down. The South African market is always slightly difficult to measure because you have mega transactions that can influence the numbers. So you have to strip them out. You know, most recently, Naspers and Prosus was, you know, a bit confusing around the numbers. But as a whole, I think we're confident with the domestic investment, but we would like to see more FDI. And as we emerge from COVID, we're hoping that that'll be an opportunity going forward. Thanks for the chance to answer, Tanya.
Thank you, Anthony. And we'll let you go now. So you're more than welcome to make a cup of coffee while you listen further. Really appreciate it. Barnaby, I'm going to put you back on the spot. As you did the research, was there any surprises for you or the ValueExchange as to why investors are investing into Africa?
Yeah, I think it's, you know, I think echoing a little bit what Harry was saying, I think for me I'm not based I'm based in Toronto, so I'm basically the typical outsider, if you like. But I think for me, the investment into Africa narrative in the last few years has become, like many markets emerging in frontier, it's become oversimplified and a kind of like a bit of a one-issue problem. So, you know, if you look around the world, investing into India, well, it's really hard to get in. Investing into China, oh, capital controls. Investing into Africa, oh, FX problems. You know, and so I think over the last few years, you know, the nuance and also the positivity, I think, around why investing into Africa has kind of disappeared a little bit, or it's been sidelined. And I think for me, you know, what surprised me in this was the amount of positivity that there is around investing into all levels of African markets. So not just the top three, but also the depth has really come through very strongly as a big piece. That it's not just basically foreign investors who are looking to just go and buy some South African debt because it's kind of roughly equivalent to other markets around the world, and it's a good diversification play. It's much deeper than that. But equally, I think the other two pieces were ESG and the digital piece, you know, and the fintech piece. So fintech we've kind of covered off, but I think that the lens, you know, you can't move these days without hearing about ESG and the impact on everyone's portfolios. The massively positive lens that puts on African investments is something that, you know, personally just hadn't occurred to me. But I think it was Harry that you were saying it's a lot easier to do good with a similar investment into Africa as you would make in America. You know, if you extrapolate it out, you know, if you pay for a coal-fired power station in America versus in anywhere in Africa, on the one side you're a villain and you're doing a terrible thing in America and all this kind of stuff, supporting fossil fuels. Fortunately, in Africa, you're driving financial inclusion, you're driving employment, you're driving all these other things which actually have an ancillary effect. So I think basically, the broad point is for me is that the Africa discussion's been, I think, oversimplified in the last few years, and actually that there's far more cause for optimism in terms of 2022 and beyond than certainly I was expecting.
Thanks, Barnaby. And we're also seeing that, and we've even seen the uptick locally, just in South Africa, not just on the continent, of fintech investments in South Africa. So that's also interesting. Harry, I see there's a question that came through from Paul Venter. He says they're based in the US and they see increased interest in private equity investment in Africa, which is good. But they have to constantly answer the questions about risk factors, and it's the same ones that was highlighted in the research. In terms of the investor feedback, is there any insights into how best to navigate some of these risk factors, and any insights as to how other investors mitigate the main risk factors? Any thoughts to share on that, Harry?
Yeah, I mean, I think, you know, you can sort of categorize these various risk factors, let's say, in 2 or 3 categories. One is obviously the macroeconomic ones, which is like, you know, the liquidity, the FX situations, or the political risk and those kind of things. But then you have a lot of around, which you call, let's say, micro, in terms of the market structures or how the investment process works, and, you know, those kind of things. So I think in the second one, what has been helpful and what other investors have been doing is, one, people who have a sizable investment, they actually come on the ground and then they get the confidence. Or like, you know, the engagement with the providers in the region, like a lot of time we spend is around the education and awareness and explaining that, you know, how the capital market infrastructure is, and because that also provides, you know, the level of confidence. So I would say it's basically, you know, either being on the ground if you can, because nothing like being on the ground, or if not, then, you know, active engagement with the providers in the region, and then we help you in terms of, you know, unpacking these issues in terms of what's the real issue and what's a manageable issue.
Yeah, Harry, we've also seen the value of bringing investors to the continent and actually seeing for themselves what the opportunities are, what the real risks are, and that's been difficult the last 2 years. You can't do that in a pandemic. So hopefully we'll see more crowds and more visitors coming back to the continent, you know, kicking the tires of sorts. Lydia, I wanted to ask you, in terms of why we're here today, it is to see how can we trigger more inflows into the continent. And one of the things mentioned was local market reforms. So if we think about South Africa or the Southern Africa region, what local market reforms do you think will help get more money into the continent?
Yeah, Tanya, so, you know, in thinking about that, we look at the regulatory framework in Africa and Southern Africa, and I think there's quite a big difference between the regulatory framework in South Africa versus other African jurisdictions, right? I'm of the view that we have a very good regulatory framework in South Africa itself. And I don't actually think that many outside investors actually understand that. And that regulatory framework, I think, should actually be giving them comfort as opposed to cause for concern. Where I think the reforms come in, or concerns may lie, is in relation to the political instability, as well as the speed at which our regulators sometimes move, right? So I think the third most important aspect of that is corruption in the region, right? And I think we are moving forward with trying to fix these issues. Our regulators are coming under pressure to move more quickly, especially in terms of approvals. It's all front of mind for us where we are with fighting the battle on corruption, right? But I think that's where the reforms need to come in. Our courts, on the other hand, have shown great resilience to corruption, and our legal system rivals sophisticated legal systems across the globe, right? And I think that people need to be educated in that respect. And actually, as Hari said, come visit, come sit on the ground and see what's actually happening, and you'll get that comfort. There are definitely areas for improvement, like I said, in terms of corruption, speed at which our regulators move, as well as some other softer issues. But on the whole, I think that it is an attractive regulatory regime, and we know where the problems lie, and we must be seen to be fixing those problems, not just talking about fixing it.
Thanks, Lydia. And I think that was also the mantra after SONA was great intentions, but now it's all about the action. And I think that will also get more capital to flow in. Barnaby, I see there's a question that came through from Jenny Chamberlain, and it's about the calculation of the equity exposure in some of the smaller markets. Zambia, Malawi, Zimbabwe, Mozambique. And does this include the foreign listed equities with exposure to certain African countries?
Yeah, it's a good point. So actually, all the numbers that I ran through are actually not AUM based. They are number of respondents based. So, you know, depending on the profile, those would stretch out in different directions. So broadly speaking, yeah, it's in terms of foreign, I mean, it is onshore assets unless explicitly not onshore. So basically, unless it's GDR, Eurobonds, as those two, I would say. So yeah, so it's very much a people lens rather than an AUM lens, if that helps.
Thank you. And then there's a question from Shaheen Mutiyar. I don't know, Barnaby or Hari, who wants to take this, and maybe Lydia can speak to it from a private equity perspective, but what is the average investment ticket size from portfolio investors versus strategic investors? And if you've got any color on investment tenors.
So I'll try to give it a shot first. So from between strategic and private equity investors, the ticket size from a strategic investor, I find, well, the trend that we have seen is generally bigger than DFIs or foreign private equity at the moment.
I'll just add quickly. So in terms of the survey, like as Barnaby said, that all the findings are in terms of the number of respondents. So we really didn't get into the detail of the ticket size. In terms of tenor, although it is not explicitly sort of covered in the questions, but the fact that the largest number of investment vehicles are institutional mandates. So that sort of reflect that these are longer term investors. So typically the investors who are in the region, they are more longer term investors rather than the trading kind of.
Thanks, Hari. I think what we've also seen in our private equity research is we look at ticket sizes, but the actual investment from the private equity fund into the investee company, and that differs year on year depending on the industries being invested in, but it's on average between 40 million and 80 million rand per investment on the private equity side, and on the venture capital side it can be anything between 10 and 20 million rand per ticket size for investment. Lydia, in terms of the actual ticket sizes of, let's say, a 1 billion rand fund size in private equity, what would an average ticket size of investor be into a fund of that size?
You're talking investment into the fund or investment into
the fund?
So Tanya, I'm a downstream private equity advisor. So unfortunately, I'll have to come back to you on that. I'm not too au fait with investments into funds by limited partners.
Thanks, Lydia. There's one last question here from Khomotso, and it's about Regulation 28 changes. Barnaby, not sure if this is in your wheelhouse because it's very local, so it might be a Lydia answer. But it asks about the increasing allocation for local retirement funds to invest into private equity and infrastructure. Has this somehow encouraged foreign investment into South Africa? And would we expect to see similar regulatory changes in the rest of Africa?
I mean, I can take a quick one. So I think the answer probably is yes. And we are seeing a similar regulations like in Kenya and Nigeria, where in terms of the allocations for the asset owners to get into the private equity and other alternative assets. So that's happening, and definitely in terms of the infrastructure. I mean, just to add here, like one of the partner in this survey, MIDA, which stands for Mobilizing Institutional Investors to Develop Africa's Infrastructure, and they're based in US, and then they're working with some of the largest asset owners in US, and the primary objective is to bring those investors in terms of meeting the infrastructure opportunities in the region. And Standard Bank, we also have been working very closely with them, and actually a three-way engagement between US asset owners, provider like ourselves, and then the pension fund groups, either in Kenya or in Nigeria or in South Africa. I think that is sort of working very well, and they already done quite a few good investments around that. So clearly there's an upside there.
And actually, just if I may add to that, one of the other, it's slightly ancillary, but one of the other projects that we've just been running was how pension funds around the world are changing their kind of operating models today. And actually the two key things that really are relevant here is basically one is within the markets that Hari mentioned. So South Africa, Kenya, in particular, an uptick in investments into, as we said, private equity, but also the number one headline is obviously ESG readiness and ESG viewing of the portfolio. So for me, that comes straight back again to causes for optimism that if ultimately the biggest pension funds in the world, or all the pension funds in the world, 66% are basically trying to view their portfolios through an ESG lens. Africa now turns up with a strong ESG narrative. It's not just therefore about investment returns. It's there's a whole a second dimension to the African portfolio in the holdings of a pension fund overseas, which is really encouraging, I think.
So there's definitely more potential for money flowing to the continent, specifically with that ESG lens.
Yeah, absolutely. So
in closing, we're almost out of time. I'm just going to ask everyone on the panel, just your thoughts about the value of this this data and this research, and how you think the industry could or should use it or should engage with it going forward. Barnaby, shall I start with you?
Sure, yeah, no, look, I mean, I think, as Harry mentioned, you know, the part of the reason we do all this research is ultimately to turn it into useful outcomes. So I think, you know, there's a couple of steps here. One is, you know, anyone who wants us to have a conversation around this, we're very much in that data gathering stage at the moment. So if people want to be able to dig into the data in a more granular way than we have today, we're more than happy to make, you know, to sit down and walk people through that so that each individual firm can get the most out of it. And then exactly as Harry says, you know, for me, the other key part is then sitting down with North American investors and European investors from an educational perspective, and also African market authorities in a broader sense from an advocacy perspective. I think would probably be the two key elements to where this goes. And ultimately that all wraps together in a report that, you know, we'll be publishing all of the quantitative and qualitative information in a single report soon, so that basically that whole narrative is kind of self-contained and ready for use.
I think that'll be wonderful to see the full report once it comes out. So I'm excited about that. Harry, your thoughts?
No, just to add a couple of points. I think one other benefit from the investors' perspective is that investors in different regions and segment, they can sort of, you know, benchmark their views with their peer group. So like we were hearing that, you know, the North American investors as of now is not really that close, but equally within the North America, there are a set of people who are active. So I think one of the benefit of an exercise like this, where investors can also see that, you know, what their peer groups are doing in the region or across the region, and hopefully that can trigger their interest into the region as well. So I think that is one. The second is also using this data in really a very focused advocacy and reform conversation. So, you know, the problem statements which are coming up, and sort of taking that back to the infrastructure and regulators and saying, you know, this is what investors are doing. So probably we can zero in onto a few of those things. And if there is improvement in that, that can hopefully, you know, give some immediate benefits in terms of the inflows into the region. So I see there's a benefit, you know, on both sides.
Thanks, Harry. And Lydia, if you would like to close us off.
Sure. So I can speak from the perspective of someone on the ground implementing transactions on a daily basis, right? And how I will use this information. So I will look at this and I will use it to assist in implementing those transactions, because now I know, like, you know, we've always known what the issues were, and we've always had a broad understanding. But now when you have the information in actual stats and data like this, it's very useful. So we know exactly what to target when we're in the middle of those discussions and negotiations. And also I can share this with clients, and clients can use the information to their benefit, because they know what investors are looking for and what concerns them. So we know the areas where we need to provide more comfort.
Thank you. It's wonderful to see that there's some practical application for the actual data, and it gives us great insights. And I can't wait for more coloring in of the data in terms of that final report. I want to thank the panelists for being here today. Barnaby, thank you so much for sharing the results with us. Harry, thank you so much for initiating this research. It's extremely valuable for the continent, and we were very happy to be a supporter of this. Lydia, thank you for adding the private equity color to it. I've put the link to the actual results that Barnaby shared in the chat. Feel free to access it. And we will continue this conversation as we get more color, more qualitative information. We'll share it with our audience. And look out for some of our future events coming up. We'll have a lot more to discuss at our annual conference, which is now in May, the 25th and 26th of May in Paarl. But I want to wish you all a very good evening. And if you are dialing from the US and your day is just getting started, I hope you have a great day. And thank you so much for joining us.